What's up, everybody? Dick Trades here from Traded Reborn. Today, we're going to be doing a mini course webinar on Fibonacci retracement. Just going to showcase and go over on how I like to use it, tips and tricks based off my experience and my chart time. So hopefully this helped you in your trading journey. Enjoy. We're going to start this off here, just giving you guys a quick intro on Fibonacci and what it is. This is from Investopedia. Here is the intro to Fibonacci. What are Fibonacci retracement levels and what do they tell you? Right, so some of you guys don't have any idea what this is. Fibonacci retracement levels are used by traders to help them find key levels of price levels in zones where a security might stall, reverse, or continue moving within a trend. Okay, they are based on the Fibonacci sequence. So the time you want to use Fibonacci retracements, the tool is when you recognize the trend, whether it's on a higher time frame or on a lower time frame. Once you find that trend, what you're gonna do is you find the pivots of the trend. And what that Fibonacci does is it gives you the level where price will retrace back to and bounce and continue in the direction of the trend. So that's mainly what the Fibonacci is. So as you can see, right, as the trend is going up, what it is you find the pivot from the low to the high, and here it is right here. You can see that it retraced to this area here, usually the 50%. I personally like the 50% to 38%. I don't even have the 61%, but depending on the tool that you use and the platform that you're drawing it on, sometimes it's reversed. The 38% could be the 61%, vice versa, right? So, but what I like to do is I like to use the 50% and the one below that. Okay, so depending on the tool that you're using, sometimes it's reversed on how you draw it, and it could be considered the 61%. So that's the key thing, is when you're looking at the 50%, it's the level further away from the 50%, the deeper retracement, right? So if you guys want to have a quick read on that, here's the link to that for later when you want to read it. And this is just some mumbo jumbo about the history of it and all that, right? We're gonna do this all live. So all right, let's hide this. Back to the charts. All right. So first off, what I want you guys to do is each level means something, correct? Yes, it does, but more so, it depends on how you use it, right? Some people use it for levels, some people use it for targets, some people use it for retracements. Yeah, so for example, right, this is how if you want to use it for level, you would use it on a higher time frame. I don't use it this way. Okay, I don't use it this way. I have my own leveling system. But let's just say, for example, right, for if some people they use it for, I'm just gonna give you a quick example of how people use it for in terms of levels, right? So this is my setting, but if you were to go to the default setting, apply defaults, right? This is this is actually how people would use it for levels, right? So this is on the 4 hour chart, let's just say. So you can see here, people, you can use these as levels, right? Look at the how the levels are marked, right? So let's just say I'm gonna mark this level. I'm gonna mark this level. I'm just using those levels, right? I'm just gonna give you a quick rundown of how people can use it. I don't use it this way, right? We're gonna show you how people use it here and how I use it. Because some people they're really bad at leveling, they're really bad at doing charts, right? And this is another way on how you can get levels, right? So if you look at it here, based off of these levels and how they react, you will see that there are reactions to the levels, right? You can see here, right? You can see here this level right here is respected, right on that orange line. And as you can see the prices are respected, right? See how prices respected to those levels? That's how you use it as levels, but that's not how I use it. So I'm going to show you what I use it for, and mainly how I like to use the Fibonacci retracement tools. So you can see here, right? See how these levels are respected? Yeah. All right. So in terms of how I use it, I'm going to show you, because mainly this course right here that I'm teaching you is my strategy and how what I do and how I use it, which is as a retracement tool to find the optimal trade entry. That's it. That's how I use it. I never use these um these other inner levels here. Okay. So first I'm going to go over the settings. Okay. So for the settings here, this is for it goes it's pretty universal for If you use like Ninja Trader, or if you use what is it, Trading View, just any platform in general, the it's usually always the same. It's not much different. So what I like to do is I like to use this low here, right? This is how I like to do it. You see that whole big thing, the big segment, the whole few full, all the lines right there that you saw. Look, my settings is just only 2 lines, right? That's all I care about is this retracement, right? So the only settings I like to use is a 0.382 and zero point 0.5. So this video will be recorded, so you can always go back and just pause on the settings here, okay? So this is the setting here. I'll screenshot it for you guys here, so you guys can have that. So the only settings I like to enable is that 0.38 and zero point 0.5. And I do have the sometimes I do have the 0 and the 100 just so that I can see where I'm drawing it, right? So, and then I extend it to the right. Usually I extend it to the right, right here, extend line to the right. And then however style you like, that's up to you, right? Whatever color you like. I've always done mine like baby blue and purple. So that's how I like it. Okay. And then in a bull trend, 30% should be below bear trend. In a bull trend, 38% should be below, and bear trend 38% above 50 on a down. Yes, that's right. 38% should always be the further level away from the 50%. So meaning it's in a sense it's just deeper retracement. It's a deeper retracement. Like right here, let's just say this is going up right now on a small time frame, right? So 30% is that purple line. See how it's the level below 50%? So um so this setting right here, with the dash and all that, this setting here is it's my higher time frame, right? My lower time frame setting is here, right? See, it's just it's a skinny line. That kind of helps me differentiate on my chart if that fib came from a higher time frame or the fib came from a lower time frame, right? So instead of labeling it, I just make it look different. That's what it is. Okay. So that's the settings for it. Whether you're on TradeAvate, Ninja Trader, whatever it is, it's always the same settings. Sometimes you have to make it um you can still keep it at 38%, but the thing is you just have to draw it upside down. Like some platforms it's gonna be like, see, you see how right here I draw, so the trend is up right now, right? So right now currently the trend is up. So I draw it from the top and I drag it down to the bottom, right? To get this level right here. Right? But then some platforms is actually backwards. So you would draw it from the bottom to the top to get it. So you kind of have to see where that 38% is and how you can draw it, depending on the platform. I think it's Think or Swim. Think or Swim is backwards. Yeah, so depending on what platform it is. I remember Think or Swim is the inverse direction. That's the lower that's my high time frame template right here, right? High time frame template is this look. Lower time frame template is this look. Right? So essentially, you just keep the two levels, and whether or not you want to see that the 0% or the 100%, all it is basically shows you where you drew it from, right? This line right here. You see, but I can see it from here, right? Once my mouse is highlighted over it, right? I can see that right here, that dot right there. That's where I drew it, basically from that high to this low. So that's why I want to keep my chart the least noise possible, right? So if I don't need to see it, I don't want to see it. I just want to see what I want to see and what I want to react to on the chart. So keep your charts like that. Whatever you don't use, get it out of there. And that way, you can only react to whatever you want to see. Now, number 4, how to identify valid pivots, right? Let's start with that. So what I like to do is I like to start up off always on the higher time frame. So always, right, just the same thing as when we're charting, we always go from higher time frame down to the lower time frame. So how you identify pivots, right, is it's fairly simple. You can see here, where do you think the pivots are right now, currently? Right now, where do you think the pivots are, right? Look at it. It's pretty obvious, right? The pivot is obviously here, and this is the lowest pivot. It's the most exaggerated pivot, most obvious pivot, right? This is current pivot of the, so because the trend is going up, as you can see, right? The trend is going up right now. As you can see, right? You zoom out, this is the trend. Trend is going up, right? And you can see here, the trend is obviously on an uptrend, right? So what does that tell you? This is a good time to draw a fib. This is on a higher time frame. You can apply the same exact thing down to the lower time frame. But we always start from the higher time frame first. So because the trend is going up, what do? You draw from the pivot. This is the most exaggerated pivot from this high. And then you can see where is the low pivot, right? This is the low pivot right here. So what you're going to do is you're going to draw a fib right there. So because the trend is up, we want to start with the point of the first pivot right here. You click on it, drag it down to that pivot. From the top wick to the bottom wick of that pivot. Okay. And then now we have this drawing here, right? And now because this is a higher time frame, what we're gonna do is we're gonna change it to the template of the high time frame OTE. There we go. Now we have the high time frame OTE. And look where we bounce, right? Is that a coincidence? You see? So because usually what happens is 50% here is normally respected, right? But it is respected on the lower time frame. So as you can see here, one of the days when it did hit the 50%, it was respected, right? But if you zoom out, I personally like the 38%. That's my favorite level. I like to aim for the 38%. Everything usually my targets are at a 38% because what happens, especially with NQ, is there's a lot of manipulation that happens within NQ, right? It's a lot more volatile than let's say ES. So when price actually goes to this usually happens on the lower time frame, but when you draw a fib on a lower time frame, what you're gonna see is price actually hits 38% more than it does 50%. Usually at 50%, what you do is you do get a little reaction, which is what you see here, right? You see this green candle? That's what that is. It hit it, 50% bounce, right? But what did it do after that? Hit that 38%, right? So with that 38%, what happens also here is a lot of times if you see it here, depending on your time frame and where you drew that pivot on what time frame, you're gonna see that on that time frame, there's no candle close. There's no candle close below that 38%. Usually what happens is you usually see the wick. You'll see a wick hit it and bounce off, or you'll see just the candle, right? But you'll see a wick hit that. That's it. So that's why you see on my analysis and whenever I'm on live, when I trade, I always tell you guys to watch for that 38%, right? That's where you want your optimal entry is. It's usually within here, you start looking for the trade within this area here. But usually that's your optimal trade entry right there. Right? A lot of times what happens is once price hits here, you can actually take an entry like right there, stop loss, give it a little space, and then that's your trade. Right. A lot of times it does work, but for me personally, I like to wait for confirmation. Right. So I don't like to just enter just because. But you can see here, it drop down, you enter the trade, you take it to the next level, and look, right? That's the simplest way to kind of put it right there. Right. And then if you can see here, obviously it depends on what time frame you're on, but on this time frame, this is how it looks. And you see this is 3,000 ticks. Right. It doesn't matter what time frame you're on. It works the same way in every time frame. Right. It all comes down to if you're a scalper or if you're what kind of time frame you trade on, but it all essentially looks the same in every single time frame, right? So obviously, where whatever time frame you trade, you would trim some off right here at the 50% and then pull TP here, right? So we'll get into that more in depth once we get to the lower time frame. But essentially, that's how you draw it. That's your first step of identifying the pivot, right? Is you identify that pivot and that pivot, and that's how you draw that fib, right? You can see here the fib was drawn here and here, right? So now what do you guys see that's next, right? We're still working on identifying pivots, right? So this is still on the daily chart, but we work on the daily chart as we move down into the lower time frames. So right now, the the long-term trend is up, but what do you see currently happening right now? Like right now, do you see any other pivot? Right? That's what you got to ask yourself. Always remember from the right to the left, right? We always want to draw from the right to the left, and we want to chart from the right to the left. So from the right to the left, right? That's how you chart. So what I see here is I see this is the highest point, and then the trend currently right now, the most current trend is the downside, right? So what are we gonna do? We're gonna draw the fib now from here, from the bottom to the top, right? To identify the retracement. If price is to break down and continue downwards, where is the retracement for it to come back into and retest so that it can have the next leg down. Which right now, if you look at my analysis based off of yesterday and how we traded, The reason why we took the longs is because we held this level. Right now, where is retracement coming to? We now draw another fib. So because we're on the daily, I still want to keep it on the daily template. So we draw from the bottom because the trend is going down. We start from the downside. We drag it upwards. We drag it up to the highest pivot, right? And that's now we have the retracement for the upside now, right? So there you go. So what does that give you? Now it gives you a range where you can trade within this time frame here, right? So now your range to trade is here and here. This is where price is going to be trading in. What does that tell you right here is that just because price is going up like this, and this is where it can get to, it doesn't necessarily mean that it's going to get there right away. It's going to get there in a day. We could literally hang out here, look, 3,000 ticks within this range, right? We could literally be here for weeks, even months sometime because we're on the daily chart. This whole section here, that's how long we can hang out in here. We've done it before. You can see here. We've done it this area here. We've been in this area here, as you can see, right? This area here, we were in here for what, 1 month right here? It shows, oh, sorry, no, 35 days, right? We can be here for however many days too. You can see here this range. This range we were in here for 54 days right here, almost 2 months. You see? We can stay in a range for a long time. Right now, this is the range, right? If we stay in this range, who knows how long we'll be in here, right? So just know that we identify the range. Now we're trading in that area. Know that we can retrace upwards, but right now the trend could still continue downwards. Something like this can happen, right? Right now we came down, we come up somewhere right here in this area, right? And then if we reject, we'll be doing something like this, down to the next level. I don't know where the next level is, but you know, all I know is that this is how price will move if we were to come down more. Something along the lines of that. Now, if we are able to hold above, right, then, so this would be considered your downtrend right here, right? This is, if you're bearish, this is your bearish play, right? This is how it would look. Otherwise, you can also go like this, right? Right now, because it's rejecting, you can go something like this, right? That's the other scenario for the bearish side. Now, for the upside, what I think it's going to be doing is I think this is how it's going to go. It's going to, right here, we're currently right here, right? So we're currently right here. We're going to do this. We're going to go up. Then we're going to go down. We're going to hold the support. Then we're going to hit this 50% here. Then we're going to do this, this, and then back to the top right there, right? So that's the bullish side of things. So that's the bullish side of how things will look um, if we were to hold this support and continue up. Personally, I think this is what it's gonna do right here. I think it's the downside. That's what I think. But for now, we are somewhat bullish going into retracement. So just because we are coming back to retracement does not mean we're gonna keep going up. You have to look at the overall trend, right? We are we did hit the lows here. So I'm thinking this is what's gonna happen. This move right here, the red side. We're just gonna retrace for more downside. But this could happen in the next couple months, and it'll take a while to play out. All right, so right here, now we're gonna go down to the lower time frame. I'm just gonna remove these trend here, less noise. You know what? Let me hide it instead. I'm gonna delete it. All right, so now we're gonna go down to the lower time frame because we've already identified the high time frame optimal entries and retracement points, right? So if we're bearish, we know that price can retrace up here. Now let's go down to the 4 hour and identify and see what we see here. We already know this is where it's holding. Okay. So this is the 4 hour time frame, right? At this point, you can actually see where the most the pivotal point are right here, right? So I would say here, looking at this also takes skills, guys. You know, identifying levels is just the same thing as charting, right? It takes skills, it takes practice. You get used to it, and it becomes easier for you to identify, right? But like I said, the most dramatic pivots is what you want. This is the most dramatic pivot, right? The most obvious pivots, those are the ones, right? So this is on a 4 hour time frame now. So now what you want to do is you want to draw from that fib up to that point right there, right? And what does that give you? That gives you now a lower time frame, oops, a 4 hour time frame fib. And look where that trade was if we were to take that trade, right? Look how reaction is right there to that 50%, right? So now you know that this is also one of the reasons why we target and how we execute trades when we're live, right? To see how far price can go upwards. Because overall we are still bearish. We're still bearish here, right? As you can see here, that's the trend, it's downside. But we also need to identify just because we're bearish doesn't mean price is just gonna keep shooting downwards. You know, it always has a retracement. And that's where we use the Fibonacci retracement to find out that retracement for the optimal entry. And this is your optimal entry for shorts right now. Right? On the lower time frame, this is your optimal entry for shorts. Right? Overall, obviously, the same way it goes down, it also goes up for retracement, right? So right now, as it's coming down, it comes up. What does that tell you? It's not gonna just keep going up, right? It's gonna retrace back down also. So at this point here, where is it gonna retrace down to, right? That's your next question. As you go down to the lower time frame, you need to ask yourself, where is the next retracement now? Because it went down, it's now retracing upwards on the higher time frame. But what about the retracement back down so that you can catch the next move up, right? Where is How's it gonna get here? Where's the retracement for it to get there? Right? So now what you do again, you can use another fib within the fib on a lower time frame. This fib here is now a 4 hour fib, right? Based off of this movement, you now draw a fib from here down to here, right? So now this gives you a retracement point where price will come down to optimal entry for the next move up, right? So if you were to look for longs, you don't long here. You try not to long here. You want it to come back to some type of key level. And you can see here 50% here is aligned with the weekly level, right? The weekly open. So that's a good point to start looking for longs, right? But you want that optimal trade entry. Otherwise, if you take it somewhere up here, guess what? Price is still retracing, and now you don't know that. You don't realize that price is still retracing, right? You can see here that price is making a lower high, right? That's telling you that price is on its way down. You can see here that it did come down. But again, this is on the 4 hour time frame. This works the same way in every single time frame. I don't know what's happening. Okay. Um, okay, there we go. Right? So this works the same exact way on every single time frame, but because we are working from the top down analysis, which the levels are right now, obviously the range is very large. You can see here is thousands of ticks because we're on the 4 hour time frame. Right, but like what we're gonna do is we're gonna keep working it down, and you're gonna see eventually you'll see the entry point. So let's say if you're a swing trader, this is the time frame you'll be trading on, right? You'll be trading on the 4 hour, daily, 2 hour, 1 hour, right? But we're day traders. And some of you guys are scalpers. You guys wouldn't be using this. This is just your main key level, right? You can literally find trades within these single candles here. So this is obviously the high time frame trade, right? Now we're gonna go down to the lower time frame. So you can see here, I've only been using fibs. There's no levels whatsoever. I'm just using a fib within the fib within a fib, right? Because this course is going to be focused on the fib alone. After that, after the fib is what you start using is your own levels to mix the confluence in. So with this here, I personally, because we are day traders and some of you guys scalp and all that, right? I like to trade, as you can see on my live. Maybe I like to finish about 30 minutes in, maximum 1 hour. If I'm in the market for about an hour from the market open, that's considered long for me. my brain starts getting fried, and it's just very mentally exhausting, right? So personally, my style, I like the 1 hour and the 50 minute. That's going to be the easiest to identify your levels. 1 hour and the 50 minute. Anytime you're on the 50 minute, the pivots are very easy to recognize, right? Here's the 1 hour. Still easy, you see? Those are the pivots, right? Very easy to recognize on the 1 hourly and the 50 minute. So here's the hourly. What I would like to do here, because it's trending up, right? You can see here on the hourly, it's trending up. So because it's trending up, what you want to do is draw a fib. But you guys can see here, what's wrong with this area? What's wrong with this area right now? Especially here, it's just chopping, right? Whenever price is chopping like this, you don't want to draw fibs. Okay, that's where people make a mistake. They get crazy with the fib and they start drawing fibs everywhere for every reason, right? They look for any reason to draw a fib. If there's a little pivot, they draw a fib, right? And that's when, when it's chopping, it's not effective. Because remember in the beginning, the intro to the fib is that you need to identify a trend. So the trend is actually here on the hourly, not here. There's no trend here in this area, right? You see that? I'm telling you, it's just like charting. When people first chart, like even me, for example, right? I went crazy with levels, right? I just start marking levels everywhere, and we don't know what's good. We don't know which one's the accurate one, right? Which one's a quality level. So in this um in this trend here, you can see the most obvious pivots is the highest and the lowest, right? So that's the trend that's the pivot you want to draw. You do not want to draw this one. This one is no good, right? Because you're still technically in the range, you see, right? So with fibs, just like anything else, just like charting, you want to practice. The more you do it, the more you understand it. It's just like chart time. You're gonna start seeing how it reacts to your fibs. You get more confident using those fibs, using those levels, trusting those OTE entries, right? So here we're gonna draw a 1 hour fib. We're gonna draw from the top here down to the pivot, the wick right there, right? The lowest wick. You see the lowest wick, right? And then this one here, because we have so many fibs already, I'm gonna change it to a lower time frame fib just to kind of differentiate the look of it. You see? So this tells me that within this 50% retracement on the higher time frame, we are now overlapping this internal 1 hour fib here, right? And what does that tell you, right? What does that show you, right? Again, remember what I said about the 38%, the purple line? You see, it's all wicks, all manipulation, right? But the body stayed above. Um, 808 was here and Marlon was here yesterday with us during London. We actually took a trade. We took the shorts. You remember that shorts, guys? We took the shorts and the price never closed past the 38%, so we held the trade. It was only the body. The body kept coming back into the levels that we needed to, right? 30% only had a couple wicks. And eventually trade did work out. Even though it looked like it was going against us, trade worked out. And then, right, just staying patient and trusting the level. So this is exactly the same thing right here, right? Same concept. Only wicks manipulated through it. So you can see here, this is an hourly fib, and on the hourly, it's all wicks passing it, right? So whatever the time frame of that fib came from, the body needs to respect that fib, right? So as you can see here, remember our trend is right now is upside, okay? We're trying to get it to into this retracement area here on the higher time frame, or so this is the area we're trying to retrace it to, or even this level here. But obviously we worry about this once this level breaks, right? We don't care about this because where the type of trader I am, I'll worry about that once we get to here. Like once we clear this area, then I'll worry as my next levels in my next trade. Because you can see here, right? Just coming from here to here, look at this. This is 1800 ticks. I don't even know if we'll get there in one day, right? So it doesn't matter to me. We only chart where we're trading currently in the range we're currently trading. We don't need to worry about what's gonna happen, next week and whatnot because those that's considered swing trading already. I'll worry about that when it comes to it. Right now we're here, right? And obviously some of you guys already know, right? Hitting 200, 406 daily, that's bangers already. Why do we need to worry about 1,000 tick, 2,000 ticks, all that? Every now and then we'll hit it, right? But only if it's within the time frame and day that we're trading. If it's allowing that, then we'll do it. If not, we're not gonna do it. right? It all depends on the range of levels that we have for that day. That's why pre-market and just charting before you start trading is very important. You can see at the expectation of that market of the day how far it can go. So one back to the 1 hour here. This is telling you that this is your optimal trade entry right here for the longs for the continuation upwards, right? And you can see here because it's making a lower high. If you're gonna take this trade, for example, here, what you're gonna do is you're gonna basically trim a little bit right there, right? You're gonna trim past that this lower high, right? And then once you actually get up there, you start managing your position, you know. Uh, for example, right? Once price starts going up, right? Once it holds this area, you can move your stop loss up, right? Once price once price breaks up above, once it hits here, TP1, right? And then once it shoots up past it again and does this, that's when you move your stop loss. Right? That's when you would move your stop loss up again, right? And then you keep trailing the trade up, and then you let the trade work out, right? So that's how you kind of take this trade. But you can see here, right? The fib is respecting, is making higher lows. You're using it into confluence with this trend line here, right? It's confirming that it wants to go higher as long as the optimal trade entry is being held. Now, the other side of things is what if it breaks, right? What if that fib breaks? If this fib decides to break, you always want to obviously have a downside and upside. Above the fib is upside. Below the fib is downside. So now let's just say price comes down, like right now, price comes down into this area and it happens to finally close below. If it closes below, it's going to come back up to retest. At that point, when it retests as it's rejecting, right, on the lower time frame is doing this up, down, up, down, up, down, but still holding that area. An area to enter momentum would be right there as it broke that high, aiming for the lows, right? So that's how it would look if you were to be um, more short bias. You wanted to break support. So that's why always you see me on the lives with something that looks like this. I always have two boxes usually. Usually I have two boxes. Sometimes I only have one because I'm just, I only want the longs, right? It's a better setup. But then in this circumstances here, if you're looking for shorts, you want this momentum to die. So you want it to give up that optimal trade entry for the longs. You want it to break that area. So at that point, you'll be looking for something like that, right? And your stop loss, depending on where the wick is, and then your trade will go to that weekly level right there, right? That's how that trade would look, you see, right? And then this trade would look something like, see, this trade would look something like this right now, right here. Since we are here, we need a bounce. That's where you would enter, either here or even an early entry here, and your TP1 somewhere right here, and then TP2. All right. So you see, that's how things would look when you're charting with a fib, right? TP1, TP2, TP1 at that trend line. So far, does that make sense, guys? Everybody following along? All right. Any questions so far? We'll answer some questions right now before we get into deep. If you guys have any questions, feel free to ask right now before we move on to the next step here, which is identifying internal and external, which we're actually doing that right now already. As you can see, right, number 5, we've actually moved on to that one already. Basically, this is your external out here, and then now you have your internal, which is the lower time frame fib, which is also, here's an example. It also overlaps. You see that? This fib also overlaps right here, along with the higher time frame and the lower time frame. So that's your multi-time frame alignment with the same analysis. Okay, here, would you wait for price to break above the last green to enter? No. because the thing is, you can see here that price is continuing to make that higher low formation, right? Higher low, higher low, higher low, higher low, higher low. So at that point, you can actually put you can actually see that it's also still bouncing here, right? Buyers are still moving it upwards. Buyers haven't given up those levels yet. We're still moving higher and higher, right? So at that point, your stop loss, you can actually put your stop loss. You don't put it below this current one. You put it below the previous one, right? Because the thing is, price can still manipulate here, but if it's able to take out this next one here, then most likely it's going to come down further. So that's why also in the risk management video that we have on YouTube, we talk about that too. We talk about you don't ever want to put your stop loss at the first pivot. You want to put it at that second pivot. Right above the last screen to enter, right? So that'll be your TP1 somewhere right here, which matches up. You can see here it matches up with the trend line right here too. You see TP1, right? TP1, TP2. You see, so it all aligns with how you are as a trader, how what kind of trader you are. If you're a long time trader, if you like to hold for hours, if you like to hold for minutes, if you like to hold for seconds, right? It all aligns with however you want to trade, depending on the time frame you go for. Okay, now we're gonna go. Oops. All right, we're gonna hide that. All right, now on to the next here. All there, yes, it is recorded. The event tells you, even the bot knows. Even the bot has been answering yes. Um, so when you enter, you're looking at 15 minute. No, so I like to chart on the 1 hour, the 15 minute for fibs. So let me show you here what it looks like. This is the hourly, right? This is how it looks like on the hourly. Let me show you on the 15 minute now. So as you can see, we're zooming in, right? We're slowly zooming in into these areas here because these are they're very big, a large range. So just know that this is where we're looking for support on the hourly now. Now we go down to the 15 minute. We're probably gonna find more fibs in the 15 minute, right? But here, right, in the 15 minute, where's the most obvious fib? We're moving up right now. Our trend is moving up, right? Where's the obvious fib? Right here and right here, right? The lowest point, right? But check this out. We already have this fib, I think. Where is it? Is it this fib? Nope. See this fib right here is from the larger time frame. Right here. This one. It's from here to here, right? Now, but here you are on the 15 minute, right? The most obvious pivot points is here to here. Let's draw a fib, just for example, from here down to the lowest. Look where we're at. Now we're here in the same area, just everything just overlapping in this area. You see, this is telling you that it's ranging, right? And remember what I was telling you guys? Uh, this area here is the range area. We're here, this whole area is just ranging. Where is it? Orange. Where's orange? Right? So that whole area is a ranging area, right? But you can see here, price is still supported. Obviously, a better choice would be to let it break the highs, right? That would be your confirmed area of entry, something like this, all right? But this is telling you that your optimal trade entry is here because now if you enter on this based off this optimal entry, you have a really good entry. That's why it's called optimal trade entry, right? So, and then your stop loss can generally be pretty tight based off the if you take an OTE entry, stop loss usually is like pretty tight because the thing is you're already at the final point of support, right? If it gives up that level, there's no point of letting it run further away from you. But if let's just say if you take this entry up here, right? If you take this entry right here, for example, right? Based off of the breakout, right? That would be fine. But look how wide your stop loss is. Your true stop loss is actually here, a good stop loss because this is your pivot, right? If you entered up here, your stop loss has to be down here because this is your pivot. Does that make sense? So because you enter here and not the optimal trade entry, you don't have an optimal trade entry. You kind of have a momentum entry, right? So these entries are based off of the optimal trade entry versus a momentum entry. Momentum entry is completely different. With momentum entries, that's probably another course within itself. Maybe we should do that one next, right? That's another style of entry. These are entries. These OTE and the fib and all that, they're just retracement for an entry point. So it gives you a really good entry, right? I think with 808, I kind of went over the momentum entry on the London session. Yeah, guys, if you guys have time to trade with us live on London, we do that free. We trade free live, and a lot of time because it's so slow, there's a lot of lessons in the London session. There's time to actually explain and go over the trade, and while we're in the trade, it moves so slow, so we can actually go, like actually plan for it, right? So there's a lot of value in the London session because a lot of the trading takes forever. But um, see, like let's just say, for example, I'm gonna give you a quick little difference here between the OTE entry and momentum entry. Momentum entry is right here, right? Once we get this entry, and once this momentum dies out, if it pops up like this and it goes, it should continue going because you're on momentum, right? But now let's say it retested here. This is your stop loss right here, right? That's your stop loss. It's not down here. Momentum entry has a different bracket, different stop loss, and different entry points, right? You entered because the price is moving in momentum. So when it doesn't have the momentum, you need to get out. Whereas OTE is that's just the support, the final support, right? So if you're in OTE entry, your final support is actually down here, right? So once that support gives up, you're out of the trade. With a momentum entry, once that pivot gives up right there, you're out of the trade, right? Because now if price comes down here, why would you let that go all the way down there? You can literally exit here and re-enter here, right? But momentum is hard. That's the problem. Momentum trading is hard because a lot of people can't accept that they're wrong, right? So when they can't accept that they're wrong, guess what they do, right? Price comes down, they're like, oh, it's still going, it's still going, it popped up already, right? It's just gonna come back down, so we're just gonna extend our stop loss down to here, and then now you're wrong, you're in deep drawdown, and then guess what? When it comes down to here, you're like, nah, it has to be, right? Either you take a big fat loss right here, or what you do is you go fuck it. Go fuck it. The hope kicks in. Move it down again. It's gonna go because it already went high at one point, right? That's the mentality you go into, man. You go fight or flight, and then you go into a fucking mode. I know you guys all been there. Don't lie. I've been there. Um, I know, man. Come on, man. We're all traders here. We don't gotta lie. This is not. This is like a support group. This is Traders Anonymous. If anybody says they haven't been there, they're lying straight through their teeth. Let's see. I'm just reading the message right now. So when you enter, you're looking at. And then when you actually enter, you're looking at. So small geese. When I actually enter, I am entering. I'm looking at the 5 minute for structure, but I'm actually looking at the 15 seconds to the 1 minute for actual entry points. Because you can see here, right? The left side, this is the 1 minute. But let's go down to the 15 second. You can use either or. 15 seconds a lot of fake out, so you have to be ready for that. So if you can differentiate what's a fake out on the 15 second, then sure. But 1 minute is more safer for beginners. But you can see here, right? I like to look at the 15 second because I can see every single tick that's moving. I can see within that 5 minute if it's moving upwards, if it's actually having a trend, right? Or how it's moving, right? It's been moving down. I'm looking at the volume on each ticks. See, I'm looking at the volume on each ticks. And then that's what aligns my entry with the 5 minute structure, right? So you can see here, this is where it's going. You can see that it's coming down. I look at how strong it's coming down, and I look at how it's holding back up. So right now, you can actually see here, this area right now. Is this is Asia session? What is this? Where are we at? We're in Asia, right? That's why it's moving. Okay. I lost my sense of time, but it's moving. That's why I'm tripping out. Um, yeah. So as you can see right here, right, we're back above the lows here, right? So this is kind of telling you that this is on the 5 minute right here that it's moving like this, moving upwards. So I'm not saying that right now to enter. I'm just saying on a normal market, when you see things like this is what tells you that this is a good entry for a start entry for the longs, right? So for it to move back up like something like this, you know? So that's what it would look like when you're looking for an entry on the lower time frame. You align the lower time frame to the high time. So that's the reason why I started showing you guys on the live both of my screens because I know that sometimes within that 5 minute is really hard. It's just that one 5 minute will we'll go to TP, or we're taking an entry off of it. But I have the lower time frame on the left side of my screen, and that's the reason why I want to implement that on the screen that I'm sharing to show you guys what I'm looking at. So you guys know exactly versus me just telling you guys by ears and making you guys look on your screen. Right? As you can see right here, look, Smoggy, this is a perfect example. You see, look what's happening. It's happening right now as we speak. This is live. There's no hindsight data. Showing you right now what is happening right here live. Right? Remember? See? Because we came down, we're holding this small time frame trend right here, right? And we're back up into that area. Look what it's doing. Price is shooting up, right? Like I said, time frame, align it with your higher time frame. Every time frame has the same exact structure. Every single time frame. Whatever you can trade on, you all you gotta do is just move the time frame down if you want to scalp. If you want to swing, you move the time frame up. Right? But look, this is literally that's why sometimes you guys see me well now you guys start seeing me draw on the lower time frame because I draw on the lower time frame, but it looks silly on the 5 minute. Look how silly this looks. This line looks like that on the 5 minute. You can't even see it. You see that? Look, within the time, the 5 minute, you can't even see the trend I'm drawing. You see that? That just shows you right there what we're looking at on the lower time frame versus the higher time frame, right? This little thing right here, can't even see anything here, but we're seeing it on the lower time frame, and we're making that trade based off of that lower time frame, right? And you see this right here was your momentum up here. This right here is your optimal trade entry, which I believe I can't see the blue level. It's right here, right? And then remember, guys, the purple line is where we like entry. Remember that? So look at the purple line, right? What is this? This is the 15-minute. That's the other line. So you see, that's a 15-minute. Look, where's that line? There you go, 15-minute. See, this is the 15-minute time frame right here, fib, right? It's within the 1 hour fib. And look where that entry would have been nice, right? Right there. You see? Look right here, you see? On the lower time frame, you can't see it on the 5 minute, you see? That's the reason why it's so crucial to show you guys it. I just couldn't figure out how to do the layout. But like I said, I was traveling and I am back now. I'm not back, but I'm settled now, and that's why all these new features I'm adding, right? To the live, to the screens that's being shared. I have time to work on all these things that, I've been wanting to work on for a while. And you can see here right here, right? Purple line right here. I want to make it. See, that's your entry right there, right? 38%. You guys see what I'm talking about right here? Look, if you guys trade on 15 second, you guys would have hit this trade already. Which some people do trade on the 15 second. This is a scalp. But you see, 15 second, let's measure this. Look at that, guys. 50 tick banger. Look, on a 15-second scale. I'm just going to show you guys. You see? Good RR, though. If you look at it. Man, what the hell happened? Look at this RR. 18 tick stop loss for a 45 tick trade. That is a 2.5 RR trade. 2.5 trade right there. That would have gave you what? $400 with 2 NQ. But your loss would have been $200. You see? This is a 15-minute scale. I'm just showing you the difference between the 5 minute and the 15 second. Right? So let's see here what else people Slim just asked, so we should long right now? You already missed your entry point. Your optimal entry was down here at the purple line, 875. You saw it right there, man. The trade already went. See, look, it's already at 60 ticks on the 15-second scale. Um, Inverse head and shoulder. Yeah, Marlon, it is like X-ray vision. It's the X-ray vision into this 5 minute candle. That's what the lower time frame always. We're just looking inside the candle. Should have done with. But yeah, so so far, these are the examples I'm showing you guys, right? So this is actually a lot more in depth than I thought it would be because now we're going into execution and entries too, right? But you can see here this trade. Look, we can't even see this box inside the 5 minute, right? This box isn't even in there because you just took a trade within that 5 minute candle, right? But this is the trade right here. Look, you would have hit the top right here already. You see, TP1, TP2 hit, TP3 right here. All right, TP1, TP2, TP3 on every pivot. But for me, I would say on a 5 minute scale, you would be looking for at least that daily print, right? But on the 15 second, things change. But you want to, that's the reason why you want to align your 15-second or your 1 minute chart to your 5 minute chart, right? Your 5 minute chart is telling you, this is actually a 15-minute chart, actually. Yeah, so it's telling you here that your daily print is your next move within different frame fibs. This is strictly basically all fibs to that I'm giving you. If there's no levels, we have no levels. We just have trend lines and fibs. That's it. See, 4 hour, 1 hour, 1 hour, 15-minute fib, right? And you're right now, remember, you got to align your trade with the higher trend, which is upside right now. We're going up. So everything you're aligning everything with, you notice, has been upside. We're just only looking for upside. We're only looking for retracement downwards as it's moving up. You see, everything is up, up, up. Right? You're aligning your analysis with the higher time frame. And then, but here's the thing. So in order to look for, let's say, in order to look for your levels right now, you want to see what your rejection level is, right? So what do you see right now? What do you guys see? Do you guys see the current trend? Look, if you were to not see the left side and you guys see only this, what do you see? You see downside, right? You see downtrend, downtrend, right? That's going down if you were not to see the left side. That's the current trend right now on this smaller time frame. Now, if you were to go to the 5 minute, this will probably be more clear as a downtrend. Let's just go 10 minute, 5 minute, right? See, 5 minute. Now we're moving down to the 5 minute. This is what we would normally trade on. This is what you look for, right? You're now going on a downtrend. So what are we gonna do, guys? We're gonna draw a fib, right? From, remember, upside you start from the top down. Downtrend, where do we draw it? We draw it from the bottom to the top. Start from the bottom here, drag it up to the highest point, right? Now, what do we have? We have another target. We have another internal fib within the fib, within a fib, right? So now this is telling you that this area here is where you will start looking for rejection. Depending on the kind of trader you are, again, if you're a scalper, this trade right here would have been your entry right here on the lower time frame, but your target would be right here. Remember what I said? 15-minute daily print, right there. If that's your 50% retracement on the rejection of these pivots. You see, you have to align it with how long you're gonna trade, right? How long you're gonna trade, what kind of trader you are. I can't help you there, right? Some people can't hold for 2, 3, 400 ticks. Some people can only hold 40 ticks, 50, 80 ticks, right? So you use this to however your edge is and whatever your comfort level is, because that's everybody has a different personality. Some people are more patient, some people are more aggressive, right? This all aligned with the way you want to trade. I'm just here to teach you how to use this tool correctly, right? And obviously, if you want to trade like me and trade with me, then you trade live. And that's how we trade it. That's how we use it. That's how we do our levels and CP and targets, right? But you can see here, right? Now, this is the 15 fib right here. I can see it. Right? I don't even need this technically because I already have the 1 hour. You see, we know that bounce rate. I'll remove that. And then what are we gonna do, right? You're gonna TP one. If you really want to stretch it, TP two, and then from there you let your runner run. Right? Because on a 15-minute fib, this is telling you right here. And if you're like a ICT trader, guys, that's your inverse, right? All you ICT guys, that's your inverse right there. Inverse imbalance right here, right? Imbalance on the green one, imbalance on the red candle. That's why it moved down, which created this void here, right? That's your BPR. That's your balance price range. So you balance. This is why it's called balance price range, guys. Balance here, balance here. Now it's balance price range. And what does that match up with, guys? What does that match up with? Coincidentally, it matches up with the fib, right? And what is that? What have I been telling you guys? ITT, all that stuff, it's just the same thing renamed from very old strategies and techniques. That's why everything is aligned. Everything is aligned no matter what strategy you call it. It's all aligned together within the same style. So I think 3.8, what is that? Wait, is the fib 6.18 or let me give you the drawing here. Save the setting. 0.382. That's just how it is. Let me see if this website tells you right here. Here, the website right here. 0.382 right here. See it? It tells you. It actually tells you right here. Look, it tells you right here. This is surprisingly, this site actually tells you the good ones. But the thing is, if you use 61, I wouldn't use it. I wouldn't use 61. That's too early. I think I'd rather miss the trade than take an early entry at 61, right? And then get clapped and have to hold it down to 38. Personally, that's what I would do. And honestly, chart time, guys, chart time, you will see for yourself. Just look for yourself in live market, guys. The 38% hits, man. It hits. Anybody that has been with me and trading with me for a while in this Discord and who's been trading with even prior to the Discord knows how I feel about the 38%. I swear by it and I trust it now because I've seen the chart time. I've had chart time with it. I've seen it in back test. I've seen it in live action. I've seen myself get clapped because I don't trust it. You know, yeah, you learn lessons and trust it, man. Trust it. Sometimes you will notice, right? What you're gonna ask yourself is no, there's no way price is gonna hit here. It's gonna hit here. Repeat that part again. And then repeat that part again. Anytime you think that 50% is good enough, it usually isn't. It's the 38% that you want. So I know a lot of people, especially on like charting and social media and stuff, they say 50% a lot. But I've personally seen 38% is where it hits, no matter what time frame you are. If it's on the 38, now this is where I tell you about time frame alignment, right? When it comes to the 15-minute, 10-minute, and 5-minute, if you're drawing fibs on these lower time frame guys, 38% hits easily, right? Easily. Price will just shoot right there, gives you that wick, and that's your candles right here, right? And then your wick is what hits that 38%. That's usually what happens on a lower time frame. On a higher time frame, obviously, candles will sit into it, right? But if you're drawing the fibs from like that 1 hourly, it takes a little bit longer to hit that 38%, right? It takes maybe, there's some time for the structure to build up to that 38%. But when you're looking at 5-minute and 15-minute guys, 38% hits easily. The wicks will touch it, right? So that's the reason why sometimes some of my levels you see like just kind of really pinpointed to the dot, just barely tap it. It's usually at the 38%. Right? I think Slim, you said something about yesterday. Your level was at 38% and it tapped it. Yeah. Yeah, so that's one of these are the unconventional things that I've noticed based off of chart time. It's not based off of everything you find on the internet, right? What you're gonna find on the internet is very basic stuff. People are gonna tell you 50%, 61%, all that stuff, right? Me, I'm teaching you guys what my experience is and along with my chart time. So you're getting this knowledge from chart time and back testing and just a lot of failures and losses and hard lessons, right? So that should cut out those those that pain for you. But 38% guys, I'd rather miss the trade at 50% than take it at 50% and get slapped with 38% after, right? If you're gonna take a anticipated trade entry without even waiting for price action, do it at the 38%. Do not do it at the 50%. You're gonna get hit with drawdown. So just I know some of you guys don't wait for confirmation. That's the reality of it, right? So if you're not gonna do that, at least do it at the 38%, and then at least your stop loss won't be so wide. But like some of you guys like the limit orders. Limit orders, 38%. I can tell you, what you want to hear and wait for confirmation, all that. But the reality of trading is that people will do these things. So just giving you guys the real advice here. 38% just gave you their past eval. What? What do you mean? Did you just take that trade? Did you just take that long? That's sick, man. That's sick. Where did you take that long to? Let's hear that part. That's sick. Look, guys, we're doing this course right now, teaching on the fib right here. I'm just giving an example, and we got DGens right here taking the trades while we're doing the course. Give an example. 38% just gave me another pass eval. So I don't think Marlon's in here to learn. Marlon's in here to look for execution while this market is live. He's in here looking for executions. The thing that's the beauty about live education, right? We don't do it with hindsight data. We do it with real data, um, just on how it's moving, right? So I'm giving you data based off of the real market. I'm not giving you bullshit data where I looked at it, I studied it like right before I hop on and give you guys that information and let the playback play it to show you guys that it worked, right? I don't scout out for areas. I will give you guys literally price while it's moving. Um, Man, it's crazy, man. But here, guys, look, if you guys really look at this, let me show you guys something else. Um, let's see here. Let me give you guys here. This is another example of a 15-second. I'm just showing you guys how how the fib can work on any time frame. I'm just gonna give you an example of the 15-second. I'll be honest, sometimes I draw on the 15-second, guys. Sometimes I do draw on the 15-second, and let me tell you why. The reason why is because on a breakout candle, this is another tip based off of experience and chart time, is that when you see a breakout candle, you want to use a fib on that breakout candle alone. And on that breakout candle on a 5 minute, you cannot see it on the 5 minute. What you can see is you can see the pivots on a 15-second or 1 minute candle, right? So here it is right here on the 15-second. What did it just do, guys? What did it just do? Look at that bounce on the 15-second, right? It hit it and it bounced. Now, if it gets below this area here, what is it going to do? The same thing it does on any high time frame fib, right? It's going to do this and come back down to the true day open, which aligns with your trend line here, right? Now, look, and then here's another thing. This is also aligning with what we're teaching right now, which is identifying internal and external fib, right? We're working with fibs inside of that 5 minute time frame now. Now, what we're gonna do, guys? What do you think? Let me hear someone give me an example. Give me a right answer, guys. What do we do here? What do we do here? No. How do we draw the fib right now? How do we draw this fib on a live action, live market right now? How do we draw this fib? Low to the high. Yep, you got it, small geese, right here. And look where it hit. Look where it hit, guys. Look where that retracement hit. Back to that fib, you see? And look where that fib is aligned. It's aligned with the 15-minute fib. 15-second fib aligned with the 5 minute fib, actually. You see? Time alignment, time frame alignment. This is what it means right here. When people say time frame alignment, this is what we're talking about. Time frame alignment. Higher time frame with lower time frame. Depending on you're a scalper 5 minutes to the 1 minute. If you're a day trader like me, 1 hour, 15 minute, 5 minute, right? If you're a swing trader, monthly, daily, 4 hour, 1 hour, right? Time frame alignment. Look, it's aligning with this area now, right? If it continues to reject here, trend line going down, what is it going to do? It's going to go down. If we hold, which we're bouncing now, right? We're on a uptrend right here. If we're bouncing here, we already bounced one, two, right? This is off of, look, these, this is a fib, this is a lower time frame fib, and this is another lower time frame fib. You see, look what's happening, right? Now it's going up, and it's going to go to the daily print, which is our 5 minute level, right? This is, look right there. See how it's going? But obviously, this is now you're just micromanaging the trade at this point when you're doing a fib within a fib within a fib, right? You're doing 15 seconds fibs now, man. You're a degenerate. That's what you are. You're drawing 15-second fibs, guys. Don't do that, right? You only do that for entry, okay? I'm giving you the example of what it looks like when you're drawing fibs within a fib inside of the lower time frame fib, right? I'm just showing you guys that it works in every single time frame. Whatever you look at, just align it with your strategy. Right? I'm telling you guys, man, the fib courses out there that I learned through experience, guys. Let me point that out. I learned through experience and chart time. My fib game was very basic, but what you learn is through experience. Just like order flow, same thing, right? You can't teach it. You can only teach it to a certain extent, and then after that, it just becomes it's based off of your knowledge and experience in chart time. So this right here, I think, is a very good course because it's based off of my experience and things that I'm teaching is not really out there for the fib game. People teach very basic stuff, OT. That's all they teach for fib. But this is how you actually use it here, according to OTE and entries and all that. You can, but I'll tell you something though. I have done back testing where I use fibs only, like no levels whatsoever. Right? It doesn't work, guys. So Don't waste your time with that idea. All right. Some of you guys might come up with the idea thinking that's brilliant, but I've done it. It's not good. Don't try it. Waste of time. All right, next level. Tips on identifying best time frame. We've already done that. I've already told you 1 hour, 15 minute. 1 hour and 15 minute is what my style is. We're day traders. We like to get out of the market fast. Um, but you want to do 4 hours to get the overall trend, right? Always with charting, you need to know the overall bias and the trend of that day. So start with the 4 hour daily, get that big time frame, the higher time frame analysis of the bias. Then after that, go to the 1 hour and then the 15 minute. Here's also the other thing. A lot of you guys trade into the day and you guys forget to remarket levels and give you guys new fresh levels. Take a pause every now and then, an hour into the market, if once it opens, redraw your fibs and you'll see. Remove some levels, redraw your fibs, and you'll see where price actually is going. Sometimes you lose sight of things and how price action is moving. Your levels from last night is no longer valid. So you got to remove it. Remove it, give you guys fresh levels, right? Something I teach on the one-on-one also is always use fresh levels, fresh liquidity, freshest levels. That's the reason why you always want to do, you always want to do, what is it? This thing right here. You always want to do from right to left, right? The newest information from right to left. Because when you start looking at things here, now all your information from the left to the right, right? And then so you want to use the most recent to the oldest levels. Those are all the tips I got for you guys. Okay, we just got through the tips already. Number 6, done deal. Gave you guys all my life lesson, guys, right there. All right, that's 3 years of pain and suffering right there, packed into about 10 minutes for you. Um, let's see. Honestly, trading can be skipped. You can really beat like years ahead or even months ahead if you can be coachable. If you're coachable and you listen to the things people are telling you and people have shown you their experiences, and you actually take that into consideration and you don't want to feel that pain too, follow those guidelines and those blueprints. The problem with the people is that they don't follow and they want to experience it themselves. They don't believe it. They don't believe you, or they think they can do better. They think they're better, so they can do better, right? Those are the ones, man. They learn the hard way. You experience it yourself, and honestly, you see the same path. It's crazy, right? When they don't listen, they go through the exact same path and journey as what whoever that has gone past it already, right? They go through the exact same trial and error. It's crazy how this path leads you down the same rabbit hole. The time where okay, yeah. So I guess maybe that is true, right? I mean, for example, like I think Pook right there, right? He doesn't really he first when he first joined. I'm gonna give you as an example. Okay, Pook right there, first joined. What is it? 3 months, got huge payoffs, huge cash outs, right? And then, but he's never learned it. He's never learned trading, and he was a copy trader, right? So for him, it was just money, strictly money. There's nothing else to it. But now that he's involved in it, he's trying to do it on his own now. You see, and once he started doing it on his own, or he started doing things on his own, he blew accounts. Right after that, he never lost a single account for the first 3 months of cash out, guys. Literally, every single account he bought got paid out, got paid out. Every single account got paid out to cash out multiple times. All right, doesn't know a lick of what a chart candle is and what anything is. All right, just all he knows is that blue button and that red button. And then this is his canon event, I guess. But what we're talking about is canon event, right? Is this is it. He has to go through these trials and errors and losses to know to put him back into place. Yeah, yeah. He actually even asked me. He's like, "This is so easy, man. How come people can't do it? This is so easy. Making thousands of dollars, cash out, taking money from a baby, taking candy from a baby." And yeah, it's you're right. Some of you guys, yeah, what you said is right. There's some of these things that has to be done, right? You have to go through the trials and error and the pain in order to respect the market. It's a sense of respect, I think. When people start losing respect for the market, you get humbled. That's all it is. You get humbled. And like for me, sometimes let me tell you something I still go through. Sometimes when I'm doing too well, I think about it and it's like I ask myself, do I even know what I'm doing? Like, I go through that. It's like even though I'm doing well, I ask myself like, man, like, do I even know what I'm doing? Yeah, then I started doing big numbers. But that's something that I think everyone goes through. You just do it sometimes, right? All right, guys, back to the course here. Tips on identifying. We did that. So now pairing multiple confluences, guys. This is where it now aligns with your edge um and what you guys want to do in terms of the stop trading, right? Some of you guys use indicators, right? You guys can use indicator, whatever, it doesn't matter, right? I personally like to use levels. I use levels, right? So what I like to use is like, these I'll use BPRs, or I'll use balance price range, which is obviously you guys saw it here. There's one right here. Right? I have an indicator for that, but it just helps me identify things when market is moving fast. Um, and I like so mainly you guys will see me trading live. I'm always drawing a fib, right? You guys see here, let's say this is a 5 minute candle or this is a 15-minute chart. I'm on 5 minute, let's say, right? I'll draw a fib. I'll draw a fib. And what do? I draw a fib and just to see how it's reacting to that price, right? Because now if you think about it, right? If you want to go up, if you want to go longs, if you're trying to go longs, you want price to continue to hold that momentum. And in order for that momentum to hold, let's say you draw this fib, like right here, this pivot right here, right? Guys, use a magnet too. It makes it easier. I use a weak magnet right here, weak magnet, and it snaps to those wicks a lot easier. Right, that's one of the tip. Right, see, just snaps. Right, so like let's just say for example, right, this is a fib right here on the 5 minute. So if I wanted to hold this momentum, right, this is how you can actually trade manage to manage your trade. If you're in longs, let's say for example, if you're in longs and you took your trade entry, like let's just say for example, right here, right, let's just say, look guys, this actually shows you right here too, another perfect 38% entry. Look guys, 38%, 38%, right? And then this is also 38% right here on this area here somewhere, right? See, that's all 38%. You see, that's all where the purple line is. Look, purple line, purple line. You see, stop loss is very tight when you take that optimal trade entry. That's what I'm telling you guys. Guys, don't listen to what you guys see on the internet. It's telling you guys data off of like some book or some 50-year-old book. The market has shifted. The market is no longer the same. There's a lot more manipulation, things. It's like the strategy is still the same, but obviously you need to understand the characteristic of the market. It knows where your stops are. It knows where your entries are, right? It's all algos. So look, entry, see, 38%. Then you look, had you enter on 38%, stop loss so tiny, right? Look at this, no stop loss, no drawdown. You see, right here, 38% somewhere down here too at the time, right? Or what's right here, 30% right there, right? But you see the drawdown on it? Very small if you take these appropriate trades. Look, this is a 50 tick. Surprisingly, that's still that little small area is 50 ticks, but still small, right? So you see, 38%, guys. Don't listen to anybody that tells you 50%. Don't do it. Don't do it. 50% is only good for when I would say an hour time frame and above. All right. 50% is good there because the reason why 50% is huge range on the higher time frame. So that's why look, you see the dash right here, these are 50%. This I would respect. You see, that's the reason why you need to draw it differently. You need to draw it with a different bracket, different template, right? To know what's the higher time frame, what's the lower time frame. Lower time frame fibs, I like 38%. Higher time frame fib, 50%, right? Let's see. You can also hold control to use it if you don't have it enabled. What does that mean? When does a fib become invalid? So that's number 8 right there, Guillermo. All right, guys. So pairing multiple confluence. What else is there that we can use? So I like to use levels, right? For example, right here, BPR, right here, balance price range, right? This little area here, you can see here, right? That's the area that has an imbalance up and then a balance down, right? That's your balance price range. So that right there, matching with this, that's telling you a very good level right there to target. And where does that level target? 38%. So if we were to be longs, make sure you trim some right there because that's going to be a strong level to watch out for, right? So if you were to say take this trade right here, right? If you were to take this trade from earlier, your TP1 would have been on the lower time frame, would have been somewhere on the highs right there, right? And then TP2 would be your daily print, which is the 50% matching up, and then TP3 would be matching up with the BPR here, right? So if you measure it from here to here, that's 30 ticks. Yeah, not much. See, so So in circumstances like this, for example, guys, because I know there's multiple confluences here, right? If there's multiple confluences here and we're drawing and we are on a higher time frame analysis of going longs, what you want to do is you obviously want to go you're going for longs, right? So these levels here are just precaution levels because now you're taking micro levels in internal levels, right? So this right here has a higher opportunity here of hitting because of the multiple confluence. What you want to do is you want to make this your TP1. And then once price, let's say for example, price brings up here, you want to move your stop loss up. That's it. You get it? So instead of trimming, you move your stop loss up and you trim here. You don't want to cut your trade short here. So that's how you can manage that trade, right? Take it up here, TP1. Then after that, move your stop loss up here, right? You just move from here to here. Then once you get up here, move your stop loss here. Once it creates another pivot, right? Once it goes up here, breaks it down here, creep up, stop loss here, right? So that's how you want to move it. Mm, Now, invalidating, right? Guillermo, you were asking that the last part of the course here. Invalidation. So invalidating is, let's just say, for example, same thing as the levels, right? If price breaks breaks down, right, and then goes up and just kind of does this, the same thing it does with levels, you remove it because obviously it's irrelevant. You want levels to actually have nice reaction. Once you see it continuing to react, you treat it like just anything else. You inverse it, right? You use it as a zone. Or for example, this let me see if I see an example here. Mhm. For example, let's say trying to find a good example here. See like this right here, for example, right? I think this one kind of has it happening right now on the 5 minute here. All right, I'm gonna delete everything else just to kind of make things easier since this is the last part of the course. All right, so what we see here is this is our support, the next support right here, right? Our next support for the fib is all based off of this one. So once price, as you can see, right, this fib right here is this fib, right, from here to here. So once we break this area, this is where it's actually breaking now. But you can see here, price is actually just smacking through it, left and right. It's now just see how it's just doing that. You see that, Guillermo? This is what I was talking about, right? This whole area here is now just being run through, right? So what you want to do is you want to remove it. Go ahead and remove it because you know that it's not respecting that obviously now. Very iffy. This area is obviously iffy here. It's still holding this hold below. So what you want to do at that point is again, what do you do, right? What do you do? What do you do is you draw from right to left. Now you have to look at what you have to ask yourself, okay, so this looks like it's about to shift downwards, but did it break support yet? No, it did not. Now you want to draw yourself, you want to ask yourself, what if price comes up, right? How far does it go up and where does it need to reject to continue the downside, right? So that's when you draw this fib right here. You draw the newest fib. This is your freshest fib now while the price is moving, while you're in action with the trade, while you're trading. If you're still trading the day, this is now your freshest fib right here, right? Now, this is telling you here, if as long as price holds underneath this fib here, you can still come down to the next fib, which is this area of support. See? So just using fib alone, you're just trading fib on fib, fib with fibs. And in terms of so treat it as like a level, not a tool. Yeah, you treat it like an area where price should stay below or if it breaks that area, then it's gonna go the opposite direction. All it is that it's telling you that the trend is still continuing. If as long as this, if we're going up, this trend needs to continue by holding this fib, right? And then this trend here, it will still hold if it continues to hold this fib. And as it goes up in every pivot, you can draw another fib as it goes up, right? The fibs will eventually keep moving upwards. Like a new fib will be here. And if it breaks a high, a new fib will probably be somewhere here, right? And then see the fib keep moving up as the trend continues. But if the fib is here and price managed to go below, you're now no longer on an uptrend. You see, based off of this, you're not on an uptrend anymore, right? You're now looking for the downtrend after that, right? Something like that. Does that make sense? All right. Um, yeah, so I think in validation, we pretty much covered everything on a fib. I think now what comes down into what comes to it is how you guys use it, how often you guys use it. Get used to using it. Just draw it, just keep drawing it. That's the only way I can tell you. Just keep drawing it and see how price reacts to it, and then you start learning which one's a good pivot, which ones are the correct one. And what I will tell you is that it's usually not the close pivots. Like the close is usually the further pivots, the more exaggerated pivots. Like you see how this one here, I can easily tell you that, oh hey, it's this pivot. But it's usually not. On a small time frame, like a 5 minute, is this pivot is your highest point. Because when manipulation happens, it's gonna hit that area. It's gonna take out this area. It's gonna hit this area, right? And then come back down. Yeah, so if you guys feel like you guys want to go into depth with anything else, any other tips or whatever it is that you guys want to learn, just let me know. Shoot it in the comments, and we will look to structure another course around that. Yep. So hopefully you guys take those tips into consideration. I can assure you that the things I taught you today, you will not find on YouTube. Maybe now you might, but when I was learning it, nothing. Just very basic stuff, that people teach you um, about the fib. But yeah, it's more so of like textbook stuff for fibs. So good stuff. 3 hour in about 2 hours and a half, 2 hours. We're gonna hop on again for London. So I need to rest my mouth because this mouth is tired, yo. My neck is hurting. My jaw is like aching. This mouth is. But yeah, because obviously I'm the only one talking, right? If you guys chime in and talk or something, maybe I'll have a break. But I'm talking for like almost 2 hours straight. I'm gonna have a sick jawline after this trading journey. All right, team. See you guys on the trading floor. Oh, also, guys, we do have another course incoming, guys. Incoming. Hold up. Show you guys the events. Some of you guys probably already know it, but some of you guys don't because you guys are slacking, man. Guys, I'm telling you guys, a lot of you guys have been asking me where, what class, what course, what time, all that stuff. I assure you, there's no need for questions. Everything is answered for you in the tabs. Okay? I want to make sure I point that out because you guys have been asking the same questions over and over. Here's the other course, guys. Here's the other course. All right. So Slim is actually going to be going over charting and overview. It's not so much of a course, it's a webinar. I want to rephrase that. It's a webinar. It's going to be basically teaching you how he identifies his levels and what he does for the Asia levels that he posts on his tab. So tune in for that. And everybody has different styles, different trading, different methods. So yeah, I think that's where you're gonna see that side. 'Cause some of you guys like his levels, some of you guys like his Asia levels and all that. So this is the most studious I've ever been about. Yeah, so it's gonna just show like another side of how people chart and how people get levels and things like that. Because his levels are different than mine, as you can see, right? Sometimes you can see that he adapted the way I level I chart too, but he still has his own thing that he does. So he has different entry points. So that's something that you guys can tune in on. All right, put it on your calendar, mark your calendar. It's on the events, guys. So just click the interested, and you guys will have that saved. All right, guys. Let me know what else you guys want to learn. Let me know what other pain story you guys want to hear about, and we go from there. Good stuff. Hopefully, you guys apply it to your trading. All right, and hopefully, it helps you better yourself and shorten your learning curve. If you want more content like this, hit the like and follow button. Comment down below what other tickers or anything else you'd like to see. For free daily full detailed analysis, trade ideas, and signals updates throughout the day, join my free Discord, link in bio. We're also giving out 7 days free premium. So lock in and let's go get this money.